Wall Street firms rallied around shares of Amazon this morning, virtually all reiterating positive ratings on the stock. As a result, we saw it pop higher at the start of trading, but once the buying evaporated, the shares began to sell in earnest. The high beta stock has really seen massive downside swoons, triggered often without warning before and after that earnings release. The stock, in fact, today trading with a 115-point trading range, also putting pressure on the Dow after a Boeing plane fell out of the sky in Indonesia, had 181 passengers, including 3 children, 6 crew, 2 pilot. There were reports that this new 737 MAX Air was having problems on the previous flight. Meanwhile, the release of this very strong consumer spending numbers helping retail names today. In fact, a huge move ahead of the holiday shopping season. So here to discuss it all, Kevin Kelly, Kelly & Co. Managing Partner, Shah Gilani, Capital Wave Forecast Editor, and Monica Mehta, 7th Capital Managing Principal. Let me start with you, Monica. A lot of moving parts in this market. The inability to sustain rallies is something worrying investors. Focusing on these names that seemed invincible. Amazon was invincible. Facebook was invincible. Apple was invincible. What happened?
Charles, even Superman's not invincible. At some point, there's a reckoning, and we've been waiting for a long time to see what happens when the effect of the drawdown of QE actually impacts the market. And that's what we're really feeling right now. And so all of this lack of stability is creating jitters. And you know, what we really need to see is a handful of days of stability with the markets inching back up and getting further away from the technicals testing the bear. And, if we see more activity with corporate buybacks, that is an opportunity to offset the negative downside of all of this QE drawdown.
Without a doubt, there are several things coming into today's Shaw that look like maybe it could help straighten this market out. That major acquisition by IBM, underscoring the fact that there's some value out there, that both corporations probably on the prowl now, as well as individual investors. More earnings, maybe Facebook, maybe Apple, maybe they can turn it around. And then also just sort of, the sense that the economy is very strong. This morning, the consumer spending number, huge. By the way, the prior month revised significantly higher. Children's Place is rocking. Ralph Lauren is rocking. Roth Stores, Dollar General near an all-time high. So there are pockets that are doing well, but the overall market's still skittish. What's going on?
I think, you live by the sword, you die by the sword, and the sword has been the tech darlings, the FANG stocks, and Microsoft. I throw Microsoft into that group because it certainly has performed like those big, the Netflix of the world. But what's happened is when they rolled over, I think the psychology changed, and no one's really looking at retail stores doing well. No one's thinking about we're coming into the fourth quarter where sales are going to be tremendous for a lot of these companies. They're looking at, well, the leadership stocks have rolled over. The financials were supposed to maybe come up behind them and take the lead. They've done absolutely nothing. They've sunk. And so everyone's wondering, well, who is going to lead this market? What sector is going to lead this market? And we almost have a bit of too much of a correlation effect here in terms of commodities, oil, equities, all going down. And that's a problem for, I think, the general psychology of the market. So I think we're in a little bit of a tight spot here, and I don't think coming into midterms we're going to get any clarity.
Kevin, I know you and I talked a little before the show began, and you're seeing really value now. I mean, the Amazon sell-off, you think maybe is overdone?
Yeah, I think it certainly is overdone because they're still growing at such a great clip, especially on the top line revenues, right? If you think they're growing at 26% and they're becoming more profitable, and I think people are underestimating what they can do on the revenue side in regards to advertising, right? So I think that's the next leg of growth for them, right? Everyone's putting an Echo into their home. They actually know your likes, your clicks, your habits, your purchases, and so you're going to start to see advertising really pick up for them.
How does an investor, though, buy it? When the stock can move 115 points in one session, when do you begin to buy? When does a viewer who may have missed his Amazon move now have a chance to start buying? Or you just sort of nibble and build a position?
Yeah, I think you dollar cost average in over a week and just understand that this isn't a quarterly story. This isn't a semi-annual story. This is a 3 to 5 year story that's going to take hold, especially because you've seen that they actually built the mobile revolution. When you think about apps, they were all developed on Amazon Web Services. And what did Amazon do? They actually undercut their own pricing so they could continue to gain market share. So I think they're really conscientious of their place, whether it's on the e-commerce side where they're they're only 5% of overall retail sales, right? So they have a long way to grow. As we start to talk about the holiday season pickup, we should see online shopping being up over 16%. That should benefit them.
Walmart's having a great session.
Yeah.
Target, maybe they're learning how to play the game. Maybe this omni-channel thing is starting to work, and maybe they actually present a real threat now to Amazon.
Yeah, I think there are threats to Amazon, but you've got to reach 90% of the population in 24 hours or less. And so Walmart can do that when people are driving home, or Amazon can do that where people are just clicking and shipping to them. I mean, Amazon does so well on their distribution centers. They get $1,300 in sales productivity per square foot.
Real quick, Monica, you mentioned the Fed. I tend to agree that they set a really harsh tone for the month with the comments from Chairman Powell. Some people are saying, hey, you know what, a rate hike every 3 months, every quarter is not a big deal. But they need to be reminded, we didn't have a rate hike from June of 2006 until December 2015. They can't overdo it. What should they do to sort of express that maybe they won't ruin this thing?
Well, I think they're getting a lot of reminders from the president, from the markets, from traders. So I think that message is being sent. And I think the greater volatility you see and the impact to consumers. Right now, consumers feel good. They're shopping. We're talking about great retail numbers. But the minute they start to pull back and get jittery, you may see a different tune from the Fed.
All right, I hope so. Guys, I'll try to bring you all back later in the show. Kevin, Shah, and Monica, thank you very much.